This video compares two software tools. An AI voice walks you through everything clearly.
Tickmill positions itself as a broker, built for traders who prioritize execution speed, tight spreads, and transparency rather than flashy bonuses or aggressive marketing. One of the platform's standout strengths is execution quality. Orders are generally filled quickly with minimal slippage, even during volatile market conditions, which is critical for news traders, scalpers, and short-term strategies that rely on precise entry and exit timing. Many traders highlight the consistency of fills and the overall stability of the trading environment during high liquidity sessions. Tickmill supports MetaTrader 4 and MetaTrader 5, making it highly compatible with expert advisors, custom indicators, and automated trading systems. This is a strong advantage for traders who rely on algorithmic strategies or prefer a familiar, professional trading interface. Leverage can go as high as 1 to 1,000 depending on jurisdiction, providing flexibility for smaller accounts, though it requires disciplined risk management. The broker also supports multiple base currencies, helping traders avoid unnecessary conversion fees, and offers Islamic swap-free trading for those who need it. Another positive is Tickmill's operational simplicity. The platform avoids unnecessary distractions, focusing instead on core trading functionality. Deposit and withdrawal processes are generally described as predictable, with traders often noting consistent processing times compared to less established brokers. This reliability matters for traders who value access to their funds without delays or excessive manual intervention. On the downside, Tickmill is not a feature-heavy ecosystem. You won't find the integrated copy trading networks, social feeds, or advanced analytics dashboards built into the platform. Educational resources exist but remain fairly basic, which may challenge complete beginners who need structured learning support. Promotions and bonuses are limited, which some traders appreciate for transparency, while others may view it as a lack of onboarding incentives. In terms of background, Tickmill was founded in 2014 and has steadily built a reputation around institutional-style pricing and execution quality. Over time, it has expanded its regulatory presence and global client base, with a clear focus on professional and cost-conscious traders rather than casual speculators. This conservative growth strategy has helped Tickmill maintain consistency rather than chasing rapid expansion. Now, looking at account structure and pricing. Tickmill offers a commission-free option where trading costs are embedded directly into the spread, appealing to traders who prefer simple, predictable pricing. For traders who want tighter pricing precision, there is a raw spread option where spreads can drop to zero during liquid market hours, paired with a low fixed commission per lot. Minimum deposits remain relatively accessible, allowing traders to start without oversized commitments. Overall, Tickmill's pricing structure rewards disciplined, cost-aware traders who value execution reliability and low trading costs over flashy features and marketing extras. FXDD takes a more traditional brokerage approach, focusing on familiar platforms and basic trading functionality rather than innovation-heavy tools. One of its core features is support for MetaTrader platforms, which allows traders already comfortable with MT4 or MT5 to start trading without adjusting to a new interface. This familiarity can be appealing for long-time Forex traders who rely on custom indicators, expert advisors, or manual chart-based strategies. FXDD also allows flexible trade sizing, including small lot trading, which can be useful for cautious traders testing strategies or managing tighter risk exposure. That said, FXDD's overall feature set feels dated compared to modern competitors. The platform lacks integrated analytics, sentiment tools, or advanced risk management features that many newer brokers now offer by default. Research and educational resources are limited, and traders looking for in-platform insights or decision support tools may find the environment bare bones. While execution is generally acceptable during normal market conditions, it does not stand out in terms of speed or consistency when compared to execution-focused brokers. There are some positives worth noting. FXDD's platform stability is often described as adequate during standard trading hours, and traders who prefer a no-frills environment may appreciate the simplicity. The broker's interface and workflow will feel familiar to anyone who has traded with older MT-based brokers in the past, reducing friction for experienced users who don't need extra layers of functionality. However, the drawbacks are more significant. A recurring concern raised by users involves operational reliability, particularly around withdrawals and customer support. Traders frequently mention delays in fund processing, unclear communication, and the need for repeated follow-ups to resolve basic issues. These experiences raise trust concerns, especially for traders who prioritize fast, predictable access to their capital. Compared to brokers that emphasize automation and transparency, FXDD feels slower and more manual in its operations. FXDD was established in 2002, making it one of the longer-standing retail forex brokers in the industry. While longevity can suggest experience, it also means the company has gone through multiple regulatory and structural changes over time. As a result, many traders evaluate FXDD based more on current service quality than its historical presence, particularly in an industry that has evolved rapidly. Now, looking at pricing and account structure, FXDD offers commission-free pricing where trading costs are embedded into spreads, alongside premium pricing options that provide tighter spreads with added commissions. Minimum deposits are generally accessible, but overall cost efficiency depends heavily on trading frequency and account selection. For active traders, total costs can accumulate when factoring in spreads, commissions, and operational inefficiencies outside of pure trade execution. When comparing customer sentiment, the difference between brokers becomes clearer. Tickmill holds a Trustpilot rating of 3.6, with traders commonly praising execution speed, clean MetaTrader performance, and fair trading costs. Comments often highlight smooth order fills and consistent trading conditions. FXDD, by contrast, has a Trustpilot rating of 1.7, with frequent complaints centered on withdrawal delays, poor communication, and frustration with account handling. Several users describe the experience as stressful due to slow responses and unresolved issues. Final takeaway: if you're a cost-focused trader who values tight spreads, fast execution, and operational reliability, Tickmill clearly stands out as the more dependable choice. FXDD may appeal to traders who prefer older-style broker setups and are comfortable navigating manual processes, but based on user feedback, the risk-to-reward balance is harder to justify. If this comparison helped, hit like, subscribe for more honest broker breakdowns, and click the link below to access the platform that actually fits how you trade, manage risk, and protect your capital.